Yeah, perfect. Should work. Okay, let's give it a few moments so people have time to join.
All right.
Okay. Okay, I'm going to send the message into Telegram. Okay. So you can hear me well, right?
Loud and clear, my man.
Perfect. Hello, everyone. Give us 2 minutes so everyone has time to join in, and we'll start very soon. Okay. Mm. Okay. Okay, I'll probably just start and others can review it then. Okay, perfect. So hello everyone, welcome to another live trading stream. This one's going to be a little bit different. So I'm going to kick off with the giveaway, try to explain it to you how it works, how you can participate, and how you can find out if you are the winner. So then I'll pass the mic to Ken, who's going to do the usual market analysis, prepare you for what's coming, what happened, and how that is going to influence the markets. And at the very end, there's going to be a JV, our performance coach, inviting you guys to his first webinar in 2 weeks. So that's as for the schedule. And let's now just dive into the giveaway. So basically, in upcoming weeks and months, I'll be doing giveaways on my Instagram profile, EAJ. I'll leave the link in the descriptions. Mostly, it's going to be Instagram stories with polls and quizzes about usual stuff, either about in-market company, like the first one, or then trading setups, market analysis. You'll see for yourself, it's going to be plenty of stories. About the frequency, I'm going to do 2, 3 per week, and how many accounts will be in the game depends on how many people are going to join the quiz or poll. So in the first example, I've posted the poll: which account has the highest pass rate and biggest payouts. It was E81, and I think 700 people participated. Let me check what was the number. Now, 583 people participated in that poll. On every 100 people, there's one evaluation that's going to be given. So if there's going to be 1,000 people participating in the poll, 10 accounts will be giveaway. So in this case today, I'm going to randomly draw 6 winners of the free evaluation. And this is how it's going to play out every single time. I'm going to post the story with poll or quiz, and then I'm going to select the winners, copy them, paste them into wheel of names, which is generator of random name from the list, and depends on how many participate that divided by 10, that many accounts I'm going to give away. 353 people answered correctly, which is E81. So from these people throughout this live stream session, I'm going to, and I'll show you the example, I'm going to display the name Let me share it. I hope it's visible, but basically your name will be displayed in a live stream session at the very bottom. If it's your name, just reach out to me on Instagram. And if the name is same in the message as on the live stream, I'm going to provide you with the account. Till since the Ken will take the stage, I will read the comments and I'll try to find most frequent questions about the giveaway, and I'm going to answer it at the very end of it. So let me now just pick the names, and I'll pass the mic to Ken, who can start with his usual weekly market analysis, throughout which I'll be displaying the names of the winners on the very bottom of the live stream. So Ken, if you want to, you can dive in. I think you have prepared the trade war. I'll leave it up to you. So I can basically just draw a random winners of the evaluation. Your mic is muted, probably. Yeah.
Yeah.
Okay.
There we go. All right. Let me just get up my screens here. Let's make this big. Hope everyone is well. Welcome back. Welcome back to another session. Guys, you need to make sure you're staying plugged into these because there's plenty of value Jake and I are dropping. So, and keeping you up to date. Let me share my screen now. Give me one moment. Okay, share. Let's talk about what's going on. Right, guys, here we go. Share screen. There we go. Okay, window. Entire screen. Okay, screen 2. All right, Jake, can you see on my side?
Yes, I can see the charts. Probably Euro,
Awesome.
Euro
Awesome.
USD. Now they
All
see.
right,
Okay.
cool, guys. Let's jump into this. What I'm going to try and do, because obviously I'm conscious of, we're having some feedback coming through into the community, and I know a lot of you guys, are very interested in the fundamentals that we're pushing out. But one of the key things is for you to sort of understand it, how to trade it. So what we'll do over these coming sessions anyway, I will always try and break down as much as possible what I'm talking about and how it translates on the charts. Just for the everyday person to understand, because it's really important, guys. Right now, everything is largely being driven by fundamentals. We, over the last sort of 16 years that I've been here, now more than ever, are we really, really seeing the markets being shapen up, these movements here by, the current fundamentals. So let's start off as I always do with the dollar. I just want to start off with the most recent developments. Okay, so I'm sure obviously a lot of you guys are aware Trump is the president, right, of the United States, and he's caused a lot of volatility since he's come into play for the dollar. And all this decline here, has been driven by Trump uncertainty. Okay, Trump. So it's all been driven by Trump uncertainty. So what we've had here, why the dollar's lost a lot of value, is because people are taking money out of the United States and going elsewhere. Okay, because they don't like all this, this scary tactics from Trump, threatening everybody with tariffs, with China, with EU, with everybody. They don't like it. So remember, if you're an investor, you want to put your money where somewhere that's safe, that's stable. And the United States, even though it's the largest economy in the world, Trump is creating a lot of uncertainty around the United States. So whenever we have uncertainty around a certain economy, right, or a stock, if you're trading stocks, if there's financial uncertainty or the outlook for the stock, for example, Apple or Tesla looks negative because of whatever reason, people are going to sell that. Same as you would with the United States. If there's uncertainty there, you're going to sell the dollar. So that's what we've seen here. Now, last week we had a breakout, okay, to the downside, which we were looking for. We were looking for this breakout eventually and respecting this structure. Now, from last week, so we had all this downside here. This was really just a continuation of the structure. But I mentioned in the previous stream, the United States had its credit rating downgraded because everyone's worried about the mounting debt for the United States. There's a lot of debt, and with Trump's looking to introduce a tax bill, to try and cut taxes across the board, America, but it's going to increase the country's debt. So again, Remember what I just said there about uncertainty. If there's uncertainty, an economy has, or a stock has loads of debt, in this case, the United States as an economy has loads of debt, it's uncertain. It creates instability. So, so people take their money out. So that's why we've seen the dollar come under pressure. Early in this week, you would have seen on at the open on Monday here, you see this downside, sort of Friday, Monday, we had downside. That was because Trump said he's hitting the EU with 50% tariff as trade talks are going nowhere. So going back to what I just said to you guys, you know how macros are just shaping up everything. Something like this bit of news where if Trump's announcing the tariff, or he's getting fed up with someone, he's saying, look, these talks are not going anywhere, we're not making any progress. If he says that sort of stuff, you know that the dollar is going to resume selling. Okay. So the dollar was being sold here on Friday and Monday because of this. However, again, see how fundamentals fit in. Come Tuesday, we started bouncing. Okay. And we're getting a bit of a technical pullback, which I'll talk about in a moment. But the reason for that is because Trump agrees to extend EU trade talks after 50% tariff threat. So he's now saying, look, we're going to give you more time to try and negotiate a deal with us. And that time, we're going to run that until sort of the July. As opposed to June, we're going to give you until the 9th of July. That's your deadline. So you better try and agree a deal with us. Okay. So dollar investors, right, are relieved. They're like, oh, okay, we've got some relief here. Trump's still a madman, but for now, allow the dollar to bounce back. So you see how sort of the fundamentals are sort of tying in and just really shaping up these movements. But the beautiful thing about it is, yes, macros drive it, as you can see right now, but it's falling in line quite nicely with what's happening technically, okay? So right now, obviously, with that latest headline or that latest news on Trump, that he's allowing those tariffs to have an extra deadline, we're seeing this pullback. So as I've been mentioning in the previous streams, guys, I am very much a dollar bear, okay? And I'm very much in line with structure remaining intact until we start seeing something drastic changing. So keep an eye. Obviously, we've recently printed a lower high here, right? This is a lower high. And now we're still in a process, in my opinion. Obviously, it's just my opinion, not telling, it's not financial advice, but we're still in a process now of printing a new lower low. Okay. So you can see we're still in a stage of lower highs, lower lows, lower highs, lower lows. You get the point. And I think we're going to print a new lower low because the uncertainty still remains around the United States with everything that's going on with tariffs, with debt concerns, with a slowdown of growth that we've seen from the United States. Okay. Let's just take a look here at the calendar. I'm going to come to this RBNZ and talk about New Zealand dollar in a moment. But I just want to fast forward and just get your eyes on a couple of data points from the United States. This is prelim GDP. So at the previous reading, when this came out, we had a contraction of 0.3%. This is the second reading, by the way. So we had the advanced number earlier in the month, but this is just the second reading. So we're not expecting much movement here. But I just want to bring this up to reinforce my point. You see how we're concerned about the United States. You see how we're selling the dollar right now. And it's because, again, this feeds into what I've just been saying. We're having a bit of an economic slowdown. A negative number, whenever you see this on Forex Factory, you see minus for GDP. This is the growth, measuring the growth of the economy. Whenever you see a minus there, that means the economy is contracting. So that's a negative for a currency. Okay. So when you see a minus there, that means it's contracting and that's a negative. So typically you're going to be thinking, okay, this is a reason, one of the confluences, as you have your technical confluences, one of your confluences to sell dollar. Okay. So this was bad. Now there are times I'm just trying to give you a bit of an educational thing here while we're still on. There are times, for example, where we have an expectation. So say this is expected, right? It's come out at minus 0.3%. And it comes out at, say, minus 0.1%. Okay, so it's still a contraction, but it's not as bad as what markets were expecting. I'm just giving you an example here. I'm not saying that's going to come out at minus 0.1%. But that would be positive because markets were fearing worse. Do you understand? So how markets shape up as well, when you're looking at the economic calendar, is expectations. What are the markets expecting? Because if we get a better or a worse number in comparison to what's been expected, because this is what markets are pricing in. You may have heard the term pricing in. Okay, markets have set a foundation of what they expect the outcome to be. If we deviate outside, anything outside of that expectation is where we get a reaction, whether it's negative or positive. All right. So this is how you really start sort of shaping up. There's some basic sort of foundations, start shaping up your use of the economic calendar with key data points like this, high impact data. Okay. So this is a second reading anyway. As I say, I don't think this is going to change much tomorrow. The important thing this week for the United States is this. This is the core PCE. So what is that? This is essentially expenditure for people, right? What's people's personal consumption expenditure? You know, what are people spend? What are prices of goods that people are spending their money on? What's their general expenditure? Their costs, right? When you're out shopping, when you're out getting your everyday goods, you're just your everyday costs. So this is the Fed's preferred measurement of measuring the price index for people's costs. Okay. So this is important. Why? Because if this comes out higher, for example, it means we still have sticky inflation. Okay. What does sticky inflation mean? Sticky inflation means, you know, price of goods and services are remaining high. Okay. If prices of goods and services are remaining high, remember, if you're a consumer, you're paying out more from your pocket, right, to these goods and services. So you're having to pay out more because the price of goods and services are high. So eventually that is going to take a strain on your personal finances. Do you understand? If you're paying out more for everyday goods, that's going to strain your personal finances a little bit more. No matter how wealthy you are, it's still going to eat into it if the prices of goods and services are rising. So the central bank, the FOMC, has to watch this, right? And think, okay, if this number's creeping up, we need to keep interest rates higher. Okay. We need to keep interest rates higher. And when interest rates are being kept higher, typically speaking, it's a positive for a respective currency. Okay. Because when we're raising interest rates, right? We're raising interest rates. We're raising costs for consumers. Okay. We're raising costs on people's mortgages, people's credit cards, their loan balances, all of that. But then we're also raising the interest that if you're coming in and you want to invest in the United States and put your money in the United States, we're also increasing the yield. Okay. I'm just going to quickly show you just while we're on the topic of yields. This is the yield. Okay. The 10-year yield, which is at 4.49%. So if you invest into the United States into what's known as a bond, I'm sure you've heard of bonds. They're offered all across the globe. You know, you invest and effectively you're lending that economy money. Okay, so you're lending the US economy, the US Treasury money, because then they take your money, right, that you've invested, and they go and use that to boost out the economy and boost out infrastructure. So they need foreign money coming in, okay, because it helps their economy grow. Do you understand? If they don't have that money coming in, it's not great, is it? And this is what I mean about how money's been flowing out from the United States. Okay, so this is the yield. So when the Federal Reserve raises interest rates, the yield goes higher, typically speaking. It goes up. So it attracts more money coming in. People are like, yeah, I want a piece of this 4.5% or whatever it may be. All right. And then when the yield's going up, typically speaking, I'm saying typically speaking, because there are other scenarios when it doesn't. And I'm going to save this for a whole nother rundown, a serious valuable stream next time when we focus on bonds, because it's very important to understand bonds, how it correlates with currency more deeper and more simplistic for you. But yeah, when yields are rising, the dollar will then rise. Okay. So I'm going to show you just a quick class examples while I'm on the topic of it. Here, you see in September, this is the US yield. In September, mid-September 16th, you see that week, September 16th, the 10-year yield after falling, it started rising. Rising. Yeah. You see that? So take note of that. 16th of September here, week of that, 16th of September. Let's go to the Dixie. Look at the Dixie here so then the Dixie started rising from the 23rd. So you see that little delay. So yields rise first, okay? Yields going up, more money for a foreign investor to potentially earn if they're investing in the United States, right? How do they invest in that bond, that yield that I'm talking about? They need dollars. So yield rises. Okay, investor rubbing their hands together. I want some of that yield. I need to sell my yen. I need to sell my euros, my Aussie, wherever I'm based in the world. I need to sell my currency and buy dollars. So then the dollar follows. You see? bam, 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 and the dollar's going up. So yields first, dollar next. Okay, so yields rise or yields fall, and the dollar's typically, depends what environment we're in, but typically the dollar's going to follow suit. So that's just an example there. So I want you guys to keep an eye on this on Friday anyway. If this is higher, you know, it could provide a little bit of support for the dollar, just because markets are thinking, look, the FOMC are not going to be cutting rates anytime soon. I'm just going to bring up the CME watch tool here. So for anyone that doesn't know, this is a way to track what the markets, you know how I said about everything's built up on expectations, what the markets expect. This is the FOMC's, well, the Fed watch tool. So this calculates probabilities, okay, of in the futures market of what people are expecting, futures traders are expecting in terms of rate hikes or rate cuts, whatever the case may be. So our next decision's on 18th of June. You can see the probability is no change. 94.4% probability that there's no change. They're not gonna cut rates yet. So if they do that as expected, you're not really going to see much reaction. If they were to surprise cut, remember, out of line of expectations, dollar's going to dump. It's not going to happen, right? July's same thing. But the large probability is for them to keep unchanged. Where the volatility is at right now is September, okay? Markets are expecting them to start cutting rates in September. So if you see this on Friday come out higher, right? Higher, you can expect September's pricing probability to decrease. The chance of them easing to decrease, because if the core PCE number's higher, it means inflation's higher. It means they have to keep rates higher. So the probability of them cutting in September smaller. Do you understand? Which would be dollar positive. Okay, so keep that in your mind. All right. So yeah, that's the overview of dollar right now. Dollars, as I say, it's in this period of pullback phase right now. Okay. And I'm personally looking for resumption, rejections, and to continue to the downside after this pullback. We've got this massive retest here of this psychological 100 area. Okay. Nice and psychological. There's a zone. If you just look left, you can see it here. It's a valid zone there or thereabouts there. You know, it's a valid area. So we're just looking to see how the price responds there. And I'd like to ideally see some rejection, especially after this evening star closure below. Would like to. We've still got a few days left of this week. Let's see how we play out. Okay. On the flip side, obviously, we had been calling euro longs. All right. The flip side to the Dixie. You know what? I'm going to leave euro because there isn't anything major to note for euro right now. Most of this dollar related is just in pullback phase. I'm going to jump over to NZD and talk about some news that we had overnight. Let's bring it up here. Okay. So, you know how we've been speaking about central banks, right? And central banks respond to things like the economy, inflation. They see where inflation's at for their decision. They see where growth is at. They see where the labor market is at before they make decisions. If the labor market's bad, if growth is bad, if inflation's coming down, these guys are looking at rate cuts, cutting rates, okay, to try and stimulate the economy, to try and cushion the blow of this downside. If we've got great labor market, you know, people got in jobs, you know, wages are high, growth is expanding, inflation's rising, then the central bank's going to look at hiking interest rates, raising rates. Okay. So in this case, we had the RBNZ overnight. Now you can see, as expected, right? They cut rates by 25 basis points. Okay. Taking a rate from 3.5% down to 3.25%. Now, in their statement, okay, the RBNZ statement, these guys basically were quite, so they did as expected, which when we do something as expected, typically we will see, rather than see NZD weaken on the basis that they cut rates, NZD strengthen. So if you go at 3 a.m. here, you'll see NZD on that decision. Just measure it out here just so you can see the price range. So NZD on that decision, initially gained 37, 38, just shy of 48 pips, and then ultimately run up and gaining sort of 50 pips on that decision. When you look at the actual statement from the RBNZ, basically they have just noted that they're cutting for now, but they're on pause. Okay, they're on pause because inflation's still a little bit sticky. Inflation's still sticky, so they want to still bring down inflation, and there's still uncertainty around what's happening with US and China. Okay, remember China is New Zealand, a big trading partner for New Zealand. So they want to see what happens with those trade talks with US and China. Okay, so NZD here, when you look at the moment, obviously we're pulling back a little bit just on the on this dollar pullback. I'm not a massive fan of NZD right now because of the uncertain outlook with US and China. But at present, when you look at this, obviously we're very much in a bullish state right now. We broke out of all this awful range here, big surge of momentum to the upside. We formed a a descending channel here, which I obviously like to call a bullish flag, right? Breakout retest, big bullish engulfing off that retest. But now we have another pullback again. So we've lost a little bit of momentum just on this dollar pullback. As I said, I'm not a massive fan of going of longs with RBNZ, with NZD. But the way it's sort of way it's structured right now, given when you look at the monthly here. Okay, so if we just go on a naked chart, the monthly's is pretty damn bullish. So we've still got a few days left of the month. The weekly's bullish. We just need to follow up on this bullish candlestick here. But right now, obviously on the daily, we're just pulling back with that dollar's pullback, excuse me. But we're back in a range, which is just this. Well, I don't really like NZD right now, but we're back in this awful range. So yeah, that's that. What else do I want to talk about? I'm going to jump over to just speak about a trade that I'm in. I want to just talk about some of the fundamentals behind it. Okay, this is now Jacob was looking at this as well last week. We both discussed this about the prospect of Euro Aussie longs. And now I did execute Euro Aussie longs. And let's just talk about this from top down a moment. Okay, with Europe, you may have seen recently there are some comments out of ECB Lagarde, Euro. Just want to see. I did post it on my Twitter, but I'll just want to get up this. Where is it? Euro Reuters. Sorry, guys, just give me one moment. I just want to get the article. Yeah, here we go. Okay, this is quite an interesting read. Now, you know how the dollar is the reserve currency of the world. Everybody does business in dollars. But you know, if you remember just about 10 minutes ago from the start of the stream or however long ago it was, I was saying how we have this uncertainty around the US, right? So when we have uncertainty, people take the money out and they lose confidence. So because of that, what I've just said and all this, you know, uncertainty Trump's created, it's making the dollar a bit vulnerable. And it prompted the ECB's president, Lagarde, okay, she's the head of the central bank in the Eurozone. She said the euro could become the dollar's alternative, right? With all this uncertainty, with all this trade tariff nonsense, the euro could become the alternative to the dollar. Now, euro is traditionally it sits as a potential safe haven. Outside of yen, outside of Swiss franc, and outside of dollar is euro. Okay, euro is there as well because the euro has always been, typically speaking, very well looked after by the European Central Bank. The Central Bank's always there to protect it. You know, whenever we've had the European banking crisis, whenever we've had the financial crisis, the ECB does whatever it needs to do in order to bring some life back to the euro, bring money back into play. They've always said, you know, we will do the utmost to defend the euro effectively, right? So there's confidence in the euro. We have a lot of big economies in Europe, i.e. Germany and France. You know, we've got big companies in Germany, which attracts a lot of foreign investment. You know, you've got all your car makers. You've got car makers all across Europe. You've got your big financial institutions, your big banks, such as Deutsche Bank, so on and so forth. So a lot of money comes into Europe. So Lagarde suggesting, why don't we look at potentially the euro becoming an alternative to the dollar? We're a long way away from that. But my point is just it reinforces my trade right now because you know how we've got all this uncertainty. Euro is somewhat a hedge against that uncertainty. People are putting money into Europe, okay, with this uncertainty. Australia is still exposed, right? Are still exposed to potential tariffs from Trump on China, and that will really hurt Australia. You know why? Monthly we've seen some upside momentum here technically, okay, pushing to the north right now. Weekly, we staged the rebound. We're forming this descending channel here, bullish flag, which I like to call. We had this reversal candlestick. We had a breakout of the channel, and now we're following up with some buy momentum. Now, when you look as well on a daily, okay, ultimately, you know, let me just zoom this out a moment. Ultimately, look at the structure, right? We were printing higher highs, higher lows, higher high. This is a new higher low still. As part of this overall structure for me, this is a new higher low, okay? Because we didn't take out these lows here. right? So this structure for me is still intact. And the fact that we've broken out of this channel, we broke out as part of this pullback, we broke structure here with these lower highs, lower lows. We broke structure here. And then you see this heavy area of resistance, this zone at around early 76s. We've been knocking on the door, knock, 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 waiting to break through. Now, why did I enter? Okay, lower time frame. Again, we were knocking on the door here, pulled back. So I was waiting again for another retest. When we get this retest here, right? We had this retest. You can tell the bulls are not giving up without a damn fight, right? They want to test it, because if it didn't, we would have retreated to the next major zone. We would have come all the way down, right? All the way down here. But the bulls are like, stuff you. We're breaking through this wall, you know. And ultimately here, you can see obviously the trend still remained intact somewhat there or thereabouts. Drop down to the 1 hour. Okay, this is where I actually entered on the 30-minute, but I'm just going to show you the 1 hour. 1 hour, this is the consolidation. Had a bit of a fake out there, which some people could have got sucked into. Then we formed this bullish engulf and we broke out. So it was down here on the 30-minute this morning. Okay, we had a big bullish engulf in there. And I decided to take longs just because I thought this is a solid breakout now. We're breaking out. We had a fake out here, but this is the solid breakout for me in the morning. I left stops below that bullish engulfing candlestick there, and now I've got this running. Okay.
Yeah, I've got pretty much the same idea. From the last week, we talked about, you know, Australian dollar. I can even share the chart that I've shared last week. Let me do that.
Yeah, please.
And then I'll remind the giveaway again. There's too many questions about it. Can you see the charts? Okay.
Yeah, all good. All good.
Yeah, perfect. Okay, so this is the same chart that I was sharing last week on Wednesday's live stream session. And I would also enter the longs on Euro Australian dollar. However, I'm still waiting for the zone 1.66, 76, 77 to be breaken above. I mean, there's this free gap that I would be trading gladly towards 1.8. I'm still not sure. As for the fundamentals, I strongly believe that Australian dollar is going to continue in downtrend. If we switch to the custom index of Australian dollar, which is this one, we go to weekly. Let me just take back chart, daily. There's still too much bearish momentum on Australian dollar. This is the trade war. The market returned back, and now we are continuing in the downtrend. Tomorrow, if I'm not mistaken, or Friday, I mean, Friday is retail sales from Australia. And if they are going to be weaker than what was expected, which is 0.3, I might be jumping on the same trade, because low retail sales might give us a hint about decreased inflation, which would mean more dovish RBA. So in that regard, I'll probably wait for Friday. But Euro Australian dollar since last week is for me also very attractive pair, Euro Australian dollar.
Yeah, definitely. What are your
yeah,
no, agree, Jake. Are you sort of quite fundamentally, obviously your technical view there, how are you sort of on the fundamentals with this pair as well?
I agree with you with the euro, with where people put their money right now. I mean, euro is a good option for them, so this could be a really good trade. And I think towards 1.8, except 1.76, 77 level, it's pretty much free. So right now we also breaking above, as you said, above the previous high. So might be actually a very good opportunity. Nevertheless, I'll just remind really quickly about the giveaway, because I saw many comments in the live chat. So basically, in upcoming weeks and months, it's not going to be one giveaway competition. It's going to be more of them. As I was saying, the frequency is going to be like 2-3 per week. It's going to happen on my Instagram page. So what you need to do is follow my Instagram page, E8Jake. I'm going to leave the name, the Instagram name, and the link in the description of this live stream, and watch the stories, because on these stories there are going to be quizzes and polls. Like on Monday, when I shared the poll, which evaluation has the highest pass rate, the biggest payouts, and there were 3 options. The correct answer was E81. So what you need to do is watch the stories and then just complete the poll. Just choose one option, answer as best as you can. And if you answer correctly, you are entering the draw participating. So on every live stream session, which is every Monday and every Wednesday, this is the last week we do only one a week. Since next week, we are going to do one on Monday at the same time as today and one on Wednesday. And on this live stream, I'm going to take a look at all the people who answered correctly, download the Instagram names. So the names that I was sharing on the very bottom of the screen are the Instagram nicknames or Instagram names. It's not going to be YouTube names or channel names, okay? And then I'm going to include them or paste them into the wheel of names, which is random name generator. It will choose X number of you who will get the free evaluation. So basically, it's pretty simple. Just watching the Instagram. Once you've answered correctly, you are participating in a draw on live stream session. And now, how many people and how many accounts? So it's in a relationship and depends on how many of you will participate in the poll or quiz. Let's say on the example, on this Monday, there were 700 people who choose one option in the poll, which means for every 100 people, we're going to give one free evaluation. And it's not going to be 5,000 all the time. The more this account grows, the bigger the evaluation and the more accounts we're going to give away. This is just a test run as it is the first giveaway. As I was saying, there will be like 2-3 per week. So if you see your name, it's your Instagram name, and once you see your name on the live stream, just message me on EHA on Instagram, and I'll provide you with the evaluation. I hope it's clear. I'm going to just really quickly check the chat if there's something that I've missed. No, I don't think so. If anything, next Monday, we're going to have the same live stream session as today. So if you will have any questions, and I'm going to display the names once again, just write them down and ask me on the next live stream session. So that's for the giveaway, and I'm also going to record one more story on Instagram to explain it more detailedly, or maybe a YouTube video so you all guys get it. And as for today, there's going to be a second giveaway. So again, I'm going to post either Instagram poll on my stories or quiz, and the only thing you need to do in order to participate is answer it or choose one option on the poll. Okay, so that's for the giveaway. Ken, would you like to continue on your market analysis, or is that all you wanted to say as for today?
I can talk all day if you want. I'm almost done. I've just seen some questions coming into the chat as well. Someone just added me and asked me about NASDAQ NQ. So I'll talk about quickly NQ as well. See what's going on there. So
sure.
Let me round off. Obviously, Jake and I are quite aligned on these longs. I will potentially look at additional longs similar to Jake, but I will look at another break retest here, just make sure we've confirmed the breach of this.
You're not sharing the screen. Stop sharing. Yeah.
Damn. All right, let me share this.
Do it once again.
Let me share this little screen here. Window. All right. Okay. Yeah. So I'll most likely be adding to these Euro Aussie longs just once we get a clear breakdown of, you guys can see this, where this supply is at right now, looking for a break and retest, and I'll take a more swing based position similar to Jake up here. Sort of this 179.50 area will be a nice little swing for me. So I'll be looking at adding to those longs. So that is all I'm active in right at this very moment in time. Let's jump over to NASDAQ. Okay, it's an interesting question. There's some longs I had before of NASDAQ. Let's talk about NQ. Now, why are we rallying? It's a good question, because obviously I've just gone and said about all this uncertainty that we've had in the United States. So why the hell are stocks rallying? Well, the thing is with stocks right now is that they're relieved. With stocks, at the end of the day, we've still had all this you know, this massive pumping to the upside is it's one-way traffic right now for US stocks, and it's kind of defying everything that I've just spoken about. And I think with that, stocks are going to continue to rise unless we see something drastic happening, in the sense of this US and China trade war, the talks, they actually fail and those tariffs remain high. Because, you know, when those tariffs first really started to take up shape here in February, look at the big decline that we had NQ, and then look at that recovery. Now, the recovery, let me make it very clear. You see this recovery right now, all this, the fact that we've pared back this move is because, look, nothing drastic has happened as such, right? We saw obviously those initial Liberation Day with Trump. You remember Liberation Day, where he had these board and he's noting all the tariffs for everybody, but more or less those have been avoided, right? They've all been delayed. China, US, the tariffs have been delayed. EU, US talks have been delayed. So markets are happy with that. You have to, one thing guys need to remember, okay? I'm putting you on some game here. The default setting for markets is to buy risk, right? We're human at the end of the day. We want risk. We want more return on our money. So the default is a mindset for traders, for institutions, is let me go and find freaking risk where I can get money, right? Where I can earn a yield. So unless we get doomsday or doom and gloom, the dips are going to continue to be bought, right? Even when we had freaking pandemic, look at it, okay? Even when we had pandemic 2020, excuse me. Let's just quickly just put it in perspective for you. Yeah, big dump here, big correction. You can't stop stocks, okay? Because it's always going to be defended by the central bank. You know, people are always going to want to invest. They're going to see bargains. So dips are just going to be bought, right? This will crash. Sorry, I won't say will. This may crash when we have our economic recession, our downturn. Okay, we'll have a massive correction. It's a bubble at the end of the day right now, but we're buying the dips. So NASDAQ dips remain attractive. I expect this to continue to push to the higher. If you ask me where we're going now, you can see, I mean, guys, we're almost in unknown territory again. You can see the next major area we're going to be sucked to is to go and challenge these all-time highs. We'll deal with a couple of areas of near-term resistance, which will be here at 21.8K, and then we'll be looking at there at 22K, 22.1. So once we make our way to here, it's just going to be a case of continuing to buy those dips and work with those key levels that you can see left, guys. You can see it there. You know, your breaks and retests, as you can see, and then push to the next zone. You know, break, retest, push to the next level. So I think we can expect that, given the structure remains very much intact right now. Okay, structure is intact. Again, after this pullback, we broke out this structure here with these lower highs, lower lows. We've broken structure, and now we're printing higher highs, higher lows again. Okay, so expect that structure to remain intact. Breakout of various periods of consolidation, flag breakout here this morning. And now we're getting a bit of a retest here of this zone. You can see where we've rejected. So if we go clear here, we're going to run in towards 21.8 quite cleanly, in my opinion. Okay, because structure is just so intact. Okay, unless we go and break structure, dips are going to continue to be bought. Okay, because markets are just remaining optimistic that there's no freaking full-blown trade war for now. Everything's been suspended. We'll worry about that later. That's an investor's mindset. Let's sweep it under the rug. We'll worry about it later. For now, I want some risk. So expect those dips to continue to be bought. When we get to 22.1K, right? When we get up here, I think you have to remember, from a herd's mentality, right? This market's built up from herd. And bear in mind, obviously, a lot of algos as well. So we've got the mass psychology of the retail trader and the institutions and everything, but they've also got algos. So when we get to big areas like this, you can instantly expect, regardless, okay, you can instantly expect a rejection here. How deep, we will see, but you're going to see a rejection. It happens every time, most times, okay? Most times, excuse me, I can't say every time. Most times we're going to get that rejection. Okay, so that's the next target area. And that's why stocks are rallying at the moment, because everything's been suspended. So I hope that answers your question. So that's NASDAQ. Yeah, I think that's more or less it. I'll go over to gold because I know everyone's, E8, we've got a lot of gold traders. Obviously, typically, Jake gave those stats, which you'll have to remind me of, but I know most people are
Yeah,
long in gold.
buying.
That's how they're making most of their profits, aren't they, Jake? Is that right?
Yeah. That's right. We've talked about it last time. Most of the
Yeah.
people, most of the successful traders at the end markets, they are buying long. If they're not scalpers, I mean, I'm not talking about scalpers who are not affected by news data releases, as they are holding the position for like 1 hour, 30 minutes. But day traders, swing traders, position traders, long-term traders, they're mostly buying gold. And here's why, right? You can see the chart.
Yeah, yeah, exactly. It's more or less one-way traffic here, guys, with all the, all the, get everyone's hedging, right? Despite the fact stocks are rallying, but gold can rally with stocks because people want to hedge. Investors want to hedge their money, okay? They want to hedge their investments. So gold's going to be buying with all the uncertainty still, all the geopolitical tensions, and we can expect that to remain the case. But we've hit a bit of a flat line for gold, right, effectively, because we're caught within a range right now, guys. When you look, this is the range. Okay, we're in this range now, which we've been in since after this all-time high print. And now market's obviously trading carefully. Now, we obviously, you can see overall structure is largely to the upside, but we're just going through this period of consolidation. A couple of streams ago, we mentioned about the potential for longs down here, which played out, big bounce, pushing to the upside, but we've lost momentum again because we're stuck in this range. Now, if we just go to the weeklier moment, it still remains bullish. I like the fact that we had, you see where we're capped by this weekly resistance here at 33K, more or less. Excuse me, not 33K, 3,300. You can see that resistance. And we had this big bullish candlestick breakout above, but now we've got this pullback. Okay. So we're just going through this, the motions of range. We could print a new lower high here. Okay. Excuse me, a new higher low down here, back at 3,230, there or thereabouts. That's what I'm potentially looking at. That's where I would be attracted in getting in longs again, down here. So just allowing this consolidation to play out, you can see a potential, and why I'm quite firm on that view as well. A potential head and shoulders forming here, guys. All right, we've got a bit of consolidation, potential bearish flag here. Either way, you guys, I'm not pulling this out of nowhere. That you can see there's support at the moment. Yeah, can you see that? 3,300. Effectively, we could see this. Bam. And this is where I'm going to rub my hands together. And I'm sure probably a lot of the E8 guys that have been going long with gold are going to be looking at a similar sort of thing. All right. So this is the area I'm most interested in for some reload on my gold longs, baby. Other than that, that's more or less it for me that I wanted to talk about today. I don't know if you want anything else you want to go, Jake.
I don't think so. We've got a gold, a few currency pairs, what we should be looking for upcoming days. So I think you did a good job. Explained everything that we talked about. So I think we can leave the rest for the next Monday, as it is the first Monday live trading session.
Okay.
Perfect. Thank you very much, Ken. And right now, it's not over yet, guys. We still have JV, who is our performance coach, who would like to invite you to his webinar. We are also building this platform. It's not about charts, market analysis. It's beyond this. It's more about trading psychology, also a very important factor in trading, building emotional resilience. So I'm not going to tell you all about it. I'll just invite JV, and he's going to invite you and tell you about this new platform that Yield Market is going to announce and introduce very soon. So let me just invite JV. Hello, JV. Can you hear us?
Yes. Can you hear me?
Yes, we can see you. We can hear you. Perfect.
Okay, fantastic. I was just listening to Ken here. That's some fantastic insights. Thank you so much. I'm always entertained and amused by your comments and learning a lot. I'm actually not. You could say I'm definitely not a fundamental trader. I'm more on the technical side. I've always been, but I'm learning a lot with you. It's really great insights, man. Thank you so much for that, and thank you so much everybody for joining in this morning. Well, this morning here on this side of the world, afternoon in Europe. But we're really excited in E8. We've been working in this program, as Jay was mentioning, for over a year now. And probably some people out there are like, oh, yeah, another mindset course or another psychological or psychology stuff, that you're going to throw at us. But that's definitely not the case. It couldn't be farther from the truth. The thing that we're going to be showing to you in a few weeks, It's something completely different. And in my opinion, and in the opinion of the EA team, the people that are involved in this program and working along, it's going to change the entire environment for the industry, especially for new and inspiring traders that have this lack of clarity sometimes when they're jumping into this industry with so much information and so many things that are around you, and who do you listen to, right? And I was actually trying to find out, and if you guys can help me out with this, trying to find out how many YouTube trading videos are out there, and not Google with AI doesn't know, ChatGPT doesn't know. It's literally, if you Google it, it's an unknown number. I found like 7.2 million YouTube videos are out there, but the thing is, and the moral of the story is that it's so overwhelming, even for seasoned traders, been trading the markets for over a decade, and even for us that we're trying to find something, somebody that's trying to find something legit or something solid or something that makes sense. Even for someone that's been trading the markets for over 5-6 years, it's tough. So how do we navigate, and how do we find ourselves in our style and in our groove inside all of this ocean of information? So we came up with this idea of a program, and we're gonna unveil the name of the program in the webinar. We're gonna have a very, very nice webinar in about 2 weeks. I think it's June 11th. It's a Wednesday, 2 p.m. London time, right? And we're gonna be unveiling the exact information that we're gonna, or the exact structure that this program is gonna have for you. What I can tell you now, though, is that this program is not just based on psychology. Actually, trading psychology is just one. I would say it's a 15 or 20% part of this program, right? Because a professional trader, when you read, posts on Instagram or an X or even YouTube, people are saying all the time, "Oh, you need to think like a professional trader. You need to think this. You need your mindset, blah blah." But what is mindset good for if your environment is not helping you make the good decisions? What mindset is good for if you're not feeling well, if you're not sleeping well, if if your core values do not align with the trading strategy that you're actually trading? So even if you're trying to think in the right way, or trying to get discipline with your intellect, man, that's not going to work. And that's probably why many people, can't, find their way out of a plastic bag with, reading and watching all these YouTube videos about mindset, but really not getting anywhere. So with this program, we're going to completely erase all of that. And we're not only going to teach you how to think like a professional and elite trader, we're going to also show you that you need to feel a certain way, you need to behave a certain way, you need to plan a certain way. You don't need to so much information. I know traders that have been studying the markets for, I don't know, 7 years, and they feel they're not ready yet to go live. I mean, true story. There's people that jump on a live account, after 2 weeks of watching their first YouTube video, and there's other people that they're just too afraid to take on risk. So how do you equalize these two worlds? It's a very interesting question, and we're going to be delving into this in a very structured way. This program is think of it as a system, right? It's not something you're going to go through just once or in a month. It's something that you're going to have access to in a monthly basis, and that's not only going to offer you valuable information to learn how to think, feel, and behave as a trader. Also, you're going to learn how to plan your trading, right? And not only write a very thorough trading plan, but also know exactly how to bet according to your trading personality and according to your goals, right? Really understand what position sizing is, really understand what an edge is, really understand what risk management. Everybody's talking about risk management. I have a very, very different idea of risk management from most people. And I think risk management starts with self-management. And that's what most people won't tell you, right? What is risk management good for if you don't actually, you know, if you don't actually follow your own word and accomplish your own promises that you do to yourself? So those are the kinds of things we're going to be discovering throughout this module. And at some point, we're also going to go very, very deep into things that have to do with expected value, with models, with systems, which probably for some it's like, oh, but isn't that the same thing? Strategy is the same thing as a model, or a model is the same thing as a system. They're very different, right? And most people, I haven't seen anyone in YouTube, like to this day, to make this differentiation between a system, a model, and a strategy. And most people think it's the same thing, but they come from different places, and it's meant to be for different traders, right? So I hope you guys tune in for this June 11th. It's exactly in 2 weeks, about 2 p.m. the UK time. And we're going to be talking about and giving you all the background for this webinar and the reasons why we're doing this as E8, right? There's other many prop firms out there. And the reason why we're doing this in the first place is that we really are committed to giving you guys the best value out there, right? We're already giving you the highest quality in the challenges, the highest quality on the payout timing, and all of those things that E8 has stand out from day one, right? But now we're stepping into this era in which we don't want you all, we don't want you to all only be, a customer or trader, but also be a person that is really committed with your trading career and be able to, or be willing to become a professional trader. And I know that there are some people out there that really want to become elite, to become professional traders, and to be, as I call it, wildly successful, right? Not to make just a few $1,000s or make a few $100,000. Any amount of money that you're thinking right now, it's possible if you do the right things and if you follow the right direction and if you get to know yourself better. And that's one of the things that we're gonna be teaching you in this program. Also, an important thing, Jake, that I want to point out here is that trading is kind of a lone profession, right? We're all in our trading desk or office or trading room or whatever, but we're usually on our own. That's good. I mean, we don't get too many distractions or too much noise as any other people that are working on offices, stuff like that. But sometimes people are like, they need someone, right? But not only that, they also need the right tools to get to the performance that they need. Not only to think right, as we were mentioning in the beginning, but also have the right tools to perform well. And in one of the modules, it's called, well, I'm not going to tell you how it's called until the webinar, right? But in one of the modules, we're going to connect you with other traders, like-minded traders that are, imagine that getting connected to a person that you don't actually know, right? But it's only just 2 or 3 steps ahead of you. And this guy just got the first payout, and you're just trying to get your first payout. And he or she's going to give you the real sauce to get to your first payout. Man, that's really invaluable. And those are some of the things that we're going to be working on this program. And I really can't wait for you guys to see it. I'm going to be showcase this thing on the 11th, again at 2 p.m. London time, UK time, so that you guys can understand the background again for the reasons why we're doing all of this, and the program, the modules, the name of the modules, and of course at the end, the way that you can become a member, right? And basically all the information that you're going to need to know before becoming a member and being part of this great project that we're working on here on E8. So I think that's it for today.
Thank you, JV. I think this program, and from what I saw, it looks amazing. Thank you for introduction. I think it was 11, right? The Wednesday, 2 p.m. London time.
Right.
Yeah. So you guys can tune in. We're going to remember. We're going to announce it once again in the emails and on another live stream session, so you don't miss it, because it's actually going to be very beneficial for you guys. It's, as I was saying, beyond the charts, are factors that also play a pivotal role in your trading journey. Okay, guys, thank you very much for participating today, JV, and also Ken for your market analysis. If you guys just tune in right now, you'll see the names of the winners a little bit earlier, so you can go rewatch it, the live stream session. I'm going to upload it on E8 Markets YouTube channel. So thank you very much, everyone who was watching, and we'll see you on Monday with the next live stream session. And there will be one more or two more this week giveaways on my E8 Jake Instagram profile. So best of luck, traders, in upcoming week, and I'll see you on Monday.
See you guys soon. Bye-bye.